Okay, so this is Module 4, Lesson 3. It's your paycheck. That's the title of this lesson. So let's talk about wages, salaries, and commission. All right, income. Income are the wages that people receive for providing resources in the market. So there are 3 types of income. Wages, computed by multiplying an hourly rate of pay by the number of hours worked. Salaries are an amount that you get paid monthly or semi-monthly, twice a month, for a specified number of hours, usually a 40-hour week. Don't count on that. If they ever get you a salary, they get more than 40 hours out of you, I promise. A sum of money paid to an employee when a particular task is completed is called a commission. So you're usually selling something. So if you sell a $10,000 car, you get a percentage of the car price. Or homes for real estate, you know, that kind of thing. So there's ways to receive your money. You get paid by cash, not very often. You can get a paper check handed to you every Friday or every other Friday. Direct deposit, where your money goes straight into your bank account. Maybe a prepaid card. A lot of temporary services do that. Or even a payroll card. So your gross pay is equal to the number of hours worked in the pay period, say the week, times your hourly rate of pay. Your net pay is your gross, what you made, minus any deductions. So if you're having money put over into savings, or you're paying for insurance, or you're paying for, you know, anything like that would be a deduction. So here is an actual math problem. Paul makes $7,000 a month plus commission. He gets 6% of everything he sells. If Paul sold $55,000 worth of items this month, what is his salary for the month? So what we're going to do is we're going to take his monthly pay. This is called his base pay. His monthly pay, his base, plus his commission. Did I spell it wrong? Not yet. Commission. That's a Y, guys. Sorry. Okay, monthly pay plus commission. So it says his monthly pay is $7,000 plus his commission. Here's how you figure that. You take the percent that he earns as a decimal. 6% is 0.06 times how much did he sell? 55,000. And that will give you his total pay, his salary. I'm going to say that he had a pretty good job. Let's just figure it. 0.06 times 55,123 equals, plus 7,000 is $10,300 a month salary. That's a pretty good salary. That's a lot more than mine. I'd like to have that job. Okay. Next page of notes here. Why don't you try this and then come back for an answer? Okay, so there's the answer to that question. She sold $21,000 above the 35. Then she sold $4,000 above the 52. So you have to count both commissions, because this is a bonus. Like, you get paid 18% for that $4,000. So this is the way you figure that. Her base salary plus what she sold above the minimum, plus whatever she sold above the $52,000. And that comes out to $5,850 a month. Okay. So deductions or withholdings. Taxes are government fees on a business and individual income, activities, products, or property. Tax revenue collected is used to provide government goods and services for citizens and to allow the government to operate. Everyone who earns income pays federal income tax. Not true all the time, because COVID's come along, changed some stuff for like teachers and nurses, and no federal income tax there, which is a tax on the amount of money that we earn or earned. So what's a W-4? It's a form required by the IRS, which is the Internal Revenue Service, IRS, which allows employers to determine what amount of income tax they should deduct from each employee's paycheck. So the rules are set forth by the IRS. Who's going to pull out what and what's it going to be for? FICA. FICA stands for the Federal Insurance Contribution Act. And FICA is another tax that most workers and employers pay. A U.S. payroll tax it is a U.S. payroll tax that is used to fund Social Security for our elderly and disabled, and, well, I guess this Medicare would be their elderly and disabled on Medicare. That'd be their medical insurance. Medicare provides hospital insurance benefits. Employees pay part so 7.65%. That's what the employee pays. And employers match it. So they pay 7.65%. Self-employed people are responsible for the entire FICA percentage, which is 15.3%. Looking at W-2s, a summary of a person's earnings and tax withholdings for the year. People are required to submit their W-2 forms to the IRS with their tax return. Not necessarily anymore. If you're filing electronically, employers submit the W-2s and they're linked to your Social Security number. So you don't necessarily have to turn in a copy, but you need to put it with your printed copy and keep it forever, just in case. So if you're paying taxes, taxpayers are required to complete a form that reports income, earned, and taxes paid during the year, which must be submitted by April 15th of the next year. Yes, the 1040 Easy. Probably going to be the first one you fill out ever. And it's pretty simple. It's like a one-page form where you list your income and talk about how many kids you got or whatever, but you don't really own anything else. So you just got a job, maybe. Okay? So, as you get paid, taxes are collected. So that's a pay-as-you-go principle. Many people try to adjust their withholdings so that they pay the correct amount of taxes for each paycheck. You can increase them or decrease them. I always increase my withholdings. I'd rather have that money back. Do a little vacation with it or whatever at the end of the year. Some people pay more than they need to pay over a pay period. That's me. So they can have a refund. This is called what we call a forced savings. I don't have no choice about this. It comes out of my check. I'm okay with it. I don't ever miss it. And the government does not pay interest. So I'd really be better off to take that forced savings and put it in a bank account so that I could get interest paid on it too. Okay, so that's the end of lesson 4.3. Everything's loaded up for 1, 2, and 3. Good luck, guys. Have a good day.